When you think about the titans of the AI revolution, your mind probably jumps to names like Nvidia or Google or Meta. But what if I told you that one of the most critical players is a company you might not even be thinking about, a company that has quietly become the custom engine builder for the entire industry? So let's pull back the curtain on AI's secret weapon.
And this is exactly why we're talking about them, 28%. In a single month, that's how much Broadcom stock surged, hitting an all-time high. A jump like that isn't just a blip on the radar. It's the market screaming that something massive is going on.
So that's the big question, right? How did Broadcom manage to position itself so perfectly to become totally indispensable to the biggest names in artificial intelligence? Well, the answer is this incredible mix of killer strategy, perfect timing, and some jaw-droppingly big deals.
Okay, let's start with the basics. To really get why they're surging, you first gotta understand who they are. And they're not just another chip company. No, think of them less like a parts supplier and more like the ultimate kingmaker in the world of AI. See, Broadcom is the company that giants like Google and Meta go to when they want to build their own custom-designed AI chips. They don't just sell you something off the shelf, they work with you to co-create the high-performance engines that are going to power the next wave of AI. And just take a look at how their business breaks down. You can see 75% comes from that core semiconductor business, the hardware. But you absolutely cannot sleep on that other 25% from software. That piece, which got supercharged by their huge VMware acquisition, is their strategic ace in a hole. It's their two-sided secret weapon. And here you can see the two halves of that strategy in action. On one side, you've got the hardware engine, the custom AI chips and the networking gear that give you all that raw power. And on the other side, you've got the digital glue from VMware, the software that helps companies actually manage these massive, sprawling data centers. It's brilliant. They sell you the engine, and then they sell you the software to run the entire garage. Okay, so now that we know who Broadcom is, let's get to the real heart of it. Why that 28% surge? Well, it wasn't just one thing. It was a perfect storm of 6 key drivers that all slammed together at the exact same time. And here they are, the 6 catalysts that whipped up this storm. We're talking 3 gigantic AI deals, completely unbelievable earnings, a guaranteed backlog of orders that's just insane, a unique competitive advantage, their huge bet on VMware paying off big time, and, of course, the whole market just cheering them on. Let's walk through the big ones. This right here was the rocket fuel. In the span of just 1 week, Broadcom locked in the absolute biggest players in AI. First, a multi-year deal with Google, then support for Anthropic, the makers of Claude AI, and then came the knockout punch, a massive deal with Meta to co-develop their next-gen AI hardware, including a first-of-its-kind 2-nanometer chip. In 1 week, they pretty much secured their biggest customers for the rest of the decade. And you could see the results immediately in their earnings. Their latest quarterly report showed that revenue from their AI chips had grown 106% year over year. I mean, it didn't just grow, it more than doubled, completely blowing past all expectations and just confirming that the demand is absolutely off the charts. And this number, wow, this is just staggering. Broadcom is sitting on a $73 billion backlog of orders. That's mostly for AI chips, all scheduled for delivery over the next 18 months. Now, if you're an investor, this isn't some wild guess. It's a giant wall of guaranteed revenue. That provides incredible certainty in a really volatile market. So why is everyone flocking to Broadcom? It comes down to this idea of a custom silicon moat. See, as big tech builds these super specialized AI models, they need what are called ASICs, chips designed to do one specific job with incredible efficiency. This lets them rely less on general-purpose chips from somebody like Nvidia. And right now, Broadcom is the undisputed king of making that happen. So with all this momentum, the company is looking way down the road, and their vision is just incredibly ambitious. They're not just thinking about next quarter, they are planning for the complete and total domination of the AI infrastructure space. And hey, don't just take it from me, this is straight from their CEO, Hock Tan. He says they have a clear line of sight to over $100 billion in AI revenue by 2027. And get this, some analysts over at Citi think even that is being conservative. They see a potential path to over $130 billion.
But, of course, no investment story is all sunshine and rainbows. A surge this massive definitely comes with some pretty big risks that we have to talk about. So what could possibly go wrong for this AI superstar?
On the one hand, you have the bull case. They're getting more customers, and their contracts are locked in for the long term. But on the other hand, there's the bear case. What if the AI bubble bursts? There's rising competition from rivals like Marvell. And you gotta look at that extremely high valuation. A price-to-earnings ratio of 78 is, well, it means the company has to execute flawlessly to justify that price tag. There is absolutely no room for error.
But even with those risks, Wall Street is overwhelmingly positive. A massive 94% of analysts who cover the stock rate it as a buy or strong buy. We're seeing price targets from huge banks like JP Morgan and Benchmark that suggest there's still room for this thing to run, which just reinforces that powerful bull case. So, after looking at the crazy rally, their big vision, and all the risks, what's the single most important thing to take away from all this? What is the core story of Broadcom today?
It really all boils down to this. Their strength is that custom silicon moat and those locked-in contracts. Their huge opportunity is the continued explosion in demand for AI. And the threats are clear: competition and the immense pressure that comes from that sky-high valuation. That's the tightrope Broadcom has to walk, leveraging its incredible moat against the pressure of its own success. So ultimately, Broadcom has pulled off a massive transformation. They are no longer just another diversified semiconductor company. They've made themselves into the central, can't-live-without-it hub for building custom AI infrastructure. They are without a doubt the new kingmaker. So the strategy is clearly working. The customers are locked in for years. The revenue is pretty much guaranteed. It all leads to one final critical question for anyone watching this space. When a company's future looks this bright, is the biggest risk you face just paying too much to get in on the action?